Federal Reserve is meeting well today, September 16th, and they're going to meet tomorrow. And the expectations are very high that they're going to cut the federal funds rate. But does that mean that mortgage rates are going to drop? So I want to quickly clear that up today so you know where things are. Stick around. Hey everybody, Catherine Newman here, and I want to quickly get on here because I've had a lot of calls over the last week because the rates have been coming down. I believe yesterday I saw that they were around 6.3, and a lot of people are jumping back in the market. We talk about this a lot on this channel, and a lot of people are really excited about this because they've been waiting for the rates to come down. They're under 6.5 right now. That's a good sign, but when they see that these people are going to get together and meet, a lot of them have an idea that the rates are going to just drastically drop. So I wanted to clear that up and just give you an insider understanding of what the federal funds rate meetings are about, what they're doing. And I also wanted to make sure that you know where you stand. If you're one of those people that's been calling, we've been talking about it on the phone. So just want to make sure that you know where things stand and how it might affect your buying decisions. And if you want to keep updated on all these kinds of things, definitely make sure you subscribe to this YouTube channel so I can keep you updated on all of the real estate stuff going around in the Manatee and Sarasota County markets. Let's get into it. So again, right now, all eyes are on the Fed, and most economists expect that they're going to cut the federal funds rate at this mid-September, which is today, the 16th, and tomorrow, the 17th, at this meeting. And of course, they're doing that to try to head off any potential recession. So they're having that meeting right now and again tomorrow, and we're all really, really curious to see what's going on in there. If we could be a fly on the wall. Now, I'd never want to be a fly. But first of all, I do want to share with you that there is a tool that economists use called the CME Fed Watch tool. Now, you're wondering, what is the CME Fed Watch tool? Well, that tool is an online resource from a group called the CME. And that tool is giving investors and analysts and economists a measure of the market's expectation for future monetary policy from the Federal Reserve. And specifically, it estimates the probability of the federal funds rate changes by the Federal Open Market Committee, which they call the FOMC, at these upcoming meetings. And according to this tool, this Fed Watch tool, markets are already betting on a change today and tomorrow to that federal funds rate that's going to happen. Hopefully we'll hear about it tonight, maybe not until tomorrow. So again, they're saying there's virtually 100% chance of this cut happening. And based on what we know now, there's about a 92% chance that it's going to be a small cut, what they call a 25 basis points. And there's only an 8% chance that it's going to be a bigger cut at these 2 days, today and tomorrow. They're saying that that probably won't happen to have that 50 basis points. They're thinking it's going to be that 25 basis points cut. And of course, there's some of you saying, what exactly is the federal funds rate? Well, the federal funds rate is the short-term interest rate that banks charge each other. Yep, they're always swapping money around out there. And that swapping of interest rates between each other is impacting borrower costs across the economy. But guys, it is not the same thing as mortgage rates. But still, of course, that Fed action, those actions and those rate cuts can shape the direction of mortgage rates and how they come about and where they're headed. And of course, here's the part that surprises a lot of us is that mortgage rates tend to respond to what the financial markets think the Fed is going to do before the Fed officially does the thing, right? Makes the cut. So basically, when the markets anticipate a Fed cut, like we're seeing today or tomorrow, hopefully, that outlook gets priced into mortgage rates ahead of time. And that's exactly what happened after we received the weaker than expected jobs reports. We got one on August 1st, and of course the economy got one on September 5th. And because of those weaker job reports, each time the mortgage rates ticked down a little bit as these financial markets grew more confident that a cut in the federal funds rate was going to come very soon. And even though we did see inflation rise slightly in the latest CPI report, the Fed is still expected to make a cut today, and that's what we're hoping for. So if the Fed goes with a 25 basis point cut, which is what pretty much everybody is expecting, guys, that is likely already baked into the current mortgage rates. So we're not going to see a big dramatic drop after today and tomorrow's meetings. It's already baked in there on that anticipated cut rate. So again, yesterday I saw the rate was about 6.3%. So that's great. It's under 6.5%. And again, that's because the anticipated Fed rate cut was already baked into that rate. So my opinion for now, after today and tomorrow's meeting, is that we're not going to see them drop much lower after today. I really think that we're going to have to wait for that next meeting before the end of the year and the next one to see where they go on those rate cuts. But again, if they do go bigger, and by some miracle they drop the rates by 50 basis points today or tomorrow, well, mortgage rates could come down more than we already seen them come down. And of course, again, we'll just see how that goes tomorrow. And that leads us to talking about where do mortgage rates go from today. So even though the rate that they might make today, which we're all expecting, or the rate they make tomorrow, it's probably not going to move the needle very much. But experts still expect the Fed could cut the federal funds rate more than once, which is great, before the end of 2025. And of course, that is if, remember, there's always a catch here, if the economy continues to cool down a little bit. If you see this graph right here, almost 80% of financial analysts believe, including this rate cut today or tomorrow, that by the end of the year, we're going to have 3 rate cuts. Now, again, that's the federal funds rate cut. We'll see how it affects mortgage rates each time that happens, if it happens. So again, remember, if multiple rate cuts do happen, or even if markets just believe they are going to happen, the chance for mortgage rates easing further in the months ahead is pretty good. And like I already said, the catch is, though, that all depends on how the economy is evolving. If there's any surprise inflation data or any unexpected shifts, that could quickly change the outlook. So, of course, nothing is guaranteed, but this is really good news if you're waiting for those rates to drop. So what is the bottom line here? Mortgage rates likely won't drop sharply over tonight or tomorrow because they do not mirror the Fed's move one for one. But if the Fed begins a rate cutting cycle, and the markets continue to expect it, then of course mortgage rates could trend lower later this year and hopefully into 2026. And I think that's what we're going to see. And you also have to keep in mind that if rates continue to lower, as we've seen over the past week or so, we've seen an increase in mortgage applications. That means people are now thinking maybe I ought to take advantage of the rate now. And this is nationally, we're seeing mortgage rate applications increase. If you're thinking about how many people might be jumping back in, and based on simple supply and demand metrics, we could see buyers back in the market, more buyers back in the market. I mean, I've seen my buyer calls increase since last week, just people that I've been talking to for a while saying, hey, this might be the time for us. And so many of you are coming. I'm booked this week and this weekend and next week just because you're taking advantage of this. But those buyers nationally, they're going to jump back in, you guys, and going to start to eat up that inventory. And what happens when there's less supply? Well, the prices drive a bit higher. Now in Florida right now, we're seeing excellent prices, more excellent, I should say. So, but we could see those prices go up a little bit more. And remember also that many resale sellers, they take their homes off the market During the holiday season, they don't want to deal with people coming in and out. But I always tell my sellers it's not a really good idea because there's still buyers out there during that season. And if more homes come off the market, yours is more competitive, prices might edge up a little bit. So if you're thinking of selling, you might want to keep your home on the market or put it up in the market during the holiday seasons. And if you've been waiting and watching the housing market, well, of course, now is the time for you to talk strategy with your professional real estate agent, wherever you are in this country. Or, of course, if you're here, definitely give me a ring and be happy to talk with you. For some of you, this may not be the right time for you to make a move, and you should never feel pressured by any real estate agent that freaks you out about you should hurry, hurry, hurry. But depending on your specific buying needs and your budget, now might be a better strategy for you. For some people, they need the rate lower because they're going to have that mortgage for 30 years or so. For some people that are buying cash, they just need the price to be lower. So even small changes in the rates can really make a meaningful difference in affordability for those of you that need to get a mortgage. And of course, understanding what's coming, what's ahead, right, is going to help you make the best decision for your situation, for your family, for your budget. So again, make sure to reach out to your trusted real estate professional or wherever you are in this country. Some of you are investors. You want to maybe pick up something while the prices are really good and the rates are a little bit lower. That makes it easy for you. And if you're just a buyer and you've been on the fence for a while and you're waiting for that rate to lower so that the payment is more affordable for you, then again, it might be your perfect time. Again, it might not be. And if you're looking in my areas here in Manatee or Sarasota or Hillsborough, Pinellas, or wherever you're looking, I'm happy to chat with you. I can also hook you up with great realtors across the country if you're looking for someone that's going to be really honest with you and tell you if it's a right move for you or not. So don't hesitate to reach out. Happy to chat with you about what works for you and your situation. And if you haven't subscribed to this channel, well, you should. I sure hope you do. And keep you updated on all of these markets here. And of course, I like to talk about the national market too, because that affects many of you because you're coming here from other states, right? So whatever you're doing in New York or Pennsylvania or Ohio or out west in Colorado or California, Arizona, all of these places, every state, what's happening nationally is also affecting you. So we'll keep an eye on this rates situation here and if they really go down. But just remember, if you are waiting for them to drop overnight, they're not going to do that. That kind of anticipated cut has already been baked into the rate that we're seeing in the next few days. I'm not saying it won't fluctuate a little bit, but you're not going to see anything drastic. I'm Catherine Noon. I'm so glad you joined. I just wanted to quickly get this out there to you so that you're not hanging in the balance wondering what's going on. We'll see what happens. I will see you next time. See you then.